David is chief U.S. fixed income economist at Morgan Stanley. He's a Bloomberg best on economic forecasts, not to mention winner of the 2009 Outlook Award for accuracy by the National Association for Business Economics. Quite a resume. David is here with us this morning. David, are you there?
Yes, good morning.
Excellent. Good morning to you. Let's talk about your forecast, 2.4%. We're going to get these numbers at 8:30. What are the, what are the risk factors on the upside and on the downside? If it disappoints, what do you think is going to be the reason? And if it's better than expected, what do you think is going to drive that?
Yeah, I think there's a pretty good level of confidence on key components like consumption. I think consumption will be right around 2.5%. I think there is uncertainty and therefore upside and downside risk on categories like inventories and trade. So inventories, we're actually looking for a 1.5 addition to GDP growth in the third quarter. That's a huge inventory contribution. Could be somewhat higher, could be somewhat lower. On net exports, we've had a big subtraction in Q2, and we're looking for another pretty sizable subtraction in Q3 of nearly a point. So I think if we get a surprise, it's likely to be in one of those categories, inventories or foreign trade.
David, is there one thing in the report that may change people's view on the strength of the economy going forward?
I don't think so. We had the moderation in GDP growth in Q2 to 1.7%. As you said, we're close to 2.5 on today's number versus a consensus of 2. It does appear that growth moderated in the middle two quarters of 2010. It's a very subpar recovery by historical standards at this point, but I think it is a sustained recovery. I think we are seeing reduced double dip risk, and we'll see growth going forward, but it appears to be pretty modest growth at this point.
David, I'm going to ask you to stick around after the break for one more question, but before then I want to ask you about QE2 coming next week. What do you think the Fed's going to tell us?
I think the Fed's going to tell us they're going to buy something like $500 billion of treasuries over the next 6 months. I think that's pretty much baked in the cake at this point. I think the uncertainty
David, hang on to that thought. We're still talking to David Greenlaw. He's one of the most accurate forecasters on the economy from Morgan Stanley, a Bloomberg best. David, we're talking about QE2 because even though GDP is coming this morning, all eyes are on the Fed for next Wednesday. You think $500 billion of bond purchases are baked in the cake. What about bond yields? We heard from Bill Gross that QE2 is nothing but a Ponzi scheme and the bond rally is over. Not the first time he's said that. What do you think is going to happen? Do bonds have further room to run, or have we seen yields peak? Or bottom out, better to put it that way.
Exactly, yes. I think we probably have seen a trough in yields, but there's always a chance the Fed could surprise with a larger buying announcement next week. I don't think today's GDP report has a great deal of impact on the outcome of next week's meeting. I think there's just a general dissatisfaction with the prospects for growth and inflation going forward. We actually think we're going to get something close to 3% GDP growth in 2011, and we actually think we're pretty close to a bottom on core inflation. If we're right on those counts, then bond yields are going to move higher. But I think it all depends on the economy at this stage, and if the economy disappoints, the Fed will buy more, and rates could go down. But based on our forecast, it looks like we probably have seen a trough in bond yields.
All right, David calling the bond market for us. That is David Greenlaw of Morgan Stanley. He is one of the best when it comes to calling the economy.